Imagine transforming your financial future with a single decision. Investing in real estate can be your pathway to building wealth, securing passive income, and achieving the life you've always dreamed of. But without the right knowledge, you risk costly mistakes and missed opportunities. This video will equip you with everything you need to know to confidently navigate the real estate market and start your journey toward financial freedom today. So let's dive in and unlock the potential of real estate investing. Welcome back to my channel. My name is Donnie Hathaway, where we help you build real wealth, long-term wealth. No quick gimmicks, just consistent work day after day to set you and your family up with generational wealth. So why should you invest in real estate? Let's start off with why I think real estate is a smart investment. Number one is the stability and growth in the real estate market. If you go back to the early 1900s, real estate has consistently increased in value year over year over year. A few dips here and there, but if you look at the long-term path of the value of properties, you can bank on pretty much 5 to 5.5% increase in value over the long-term time period. So as long as you're holding on to the property and you're not going to panic when the market dips or shifts in any way, then you're going to set yourself up for success. The second point is the potential for passive income through rentals. The great thing about real estate investing is that you can leverage money to purchase a larger asset and then have somebody, a tenant, pay down that asset for you. While you're building equity, the property is gaining value year over year. The third benefit to investing in real estate is some of the tax benefits and incentives. You're definitely going to want to consult with your CPA on this. There are various write-offs that you can have to lower your taxable income, whether you're a W-2 employee or you're a business owner. Next, let's explore some different ways to invest in real estate. So there are a few different ways to invest in real estate, but most commonly people think of either residential homes or commercial real estate. Now, residential properties is defined as anything from 1 to 4 doors. So you could have duplexes, triplexes, and quadplexes in your residential portfolio. Residential real estate is probably the most common where people start out their investing career compared to commercial properties. So commercial properties can be either office spaces, retail spaces, industrial spaces such as warehouses or manufacturing facilities. So commercial properties typically have a higher skill level that is involved when investing in these type of properties. And that's because you're dealing with either corporations or business owners that have a higher business acumen when it comes to these type of properties. So if you are just starting out in investing, commercial properties is not probably the best opportunity to start with. So land is another investment opportunity that a lot of people probably don't think of when they consider investing in real estate, typically because it has a slower return on investment, but there is long-term growth potential when investing in land. And lastly, real estate investment trusts are another great way to get your foot in the door when it comes to investing in real estate. They're simple, they can generate passive income, and it's simply like investing into a stock. You're buying stock into a corporation that is actively investing in real estate, and ideally they are making profits and you're benefiting from those profits. So are you ready to get started in investing in real estate? Here's some simple steps to kind of get you started on your journey. Number one, you need to set clear investment goals. You got to have a direction and something to work towards when you're starting investing in real estate. There's a lot of money involved and you want to make sure that you're going down the right path. Speaking of money, number two is you need to assess your financial situation. How much risk are you able to take and how long can you weather that risk if the market does dip a little bit? Number three, you need to research and select a target market. This is one of the most important steps, but I think you need to start off with one general area, whether it's your location that you're living in or in an area that you want to invest in and see lots of potential in. But I think staying in one location, one city is vital when it comes to starting off your investing career. Number four, it's important to build a team around you, build support around you to help you navigate the ins and outs of the real estate market. Having a realtor in your back pocket to help you navigate this market and understand market dynamics and shifts. Having a lawyer, having an accountant, and obviously if you're doing any projects or renovations, having contractors is going to be a vital step in your investing career as well. The fifth step is going to be securing financing. So whether you're paying cash for the properties, whether you are taking out a mortgage for the properties, you want to make sure that that is set up and ready to go once you start looking at properties. which that takes us into our sixth step, and that is looking at properties, walking through homes, and evaluating the deals. Do they make sense financially? You're buying based on the numbers and whether it makes sense financially and is going to return a profit for you, versus buying emotional where you're going to be living in this property. You want to eliminate any emotions when you're investing in real estate. And lastly, number 7, you're going to make an offer and purchase your first investment property. You're going to want to avoid these common mistakes to ensure that you are successfully investing in real estate and making a profit. Number 1, don't skimp out on the research. This is probably one of the most important steps when it comes to investing in real estate. You might go through hundreds of deals before you write your first offer. It just depends on the market dynamics, but research into the market is important. And this is why I believe that it's important to stick with one location, become the expert in that location, and then you can branch out into other locations once you understand market dynamics and writing offers, negotiating deals. Next, underestimating costs can be a huge one for any first-time investor. And this is why it's important to build your support team around you. Things like maintenance costs, taxes on a property, insurance on a property, or holding costs, operating cost for the investment. If you are flipping a property, these numbers are going to need to be dialed in to make sure that you don't lose out money when it comes time to sell that property for a profit. The third mistake that people often make is ignoring location and market trends. This is why it's important to understand the market trends and purchase the property based on the numbers that make sense financially and not emotionally. Oftentimes, investors get caught up in buying a property that is a little bit more risky, and they end up losing money in the end because they ignored market trends. And the fourth mistake investors often make is failing to plan for vacancies. If you are renting out your property, whether it's long-term or short-term, there are going to be some times when nobody is in the home renting the home. So you need to plan and account for the home being empty and no income coming in. Here are some strategies to help you succeed in real estate investing. So number 1, focus on cash flow. This will provide you with a reserve account and the ability to survive any fluctuations or dips in the market, because dips will happen. There will be changes in market conditions, and that's why it's important to have this reserve funds available. In case you have any vacancy issues or maintenance issues arrive, such as a new roof needing to be replaced, a new AC, you'll have the funds to weather that storm. So number 2 is to diversify your investments. This will allow you to survive any fluctuations in market trends, location-specific market trends, whether it's condo market or residential real estate or a particular neighborhood. If you were heavily invested in a neighborhood that went downhill, or a condo market that went downhill, and that's all you had your money in, you risk the potential to lose a lot of your investment. And number 3 is to keep up with market trends and regulations. If you're not constantly monitoring the market that you're invested in, then you're doing yourself a disservice. And this is where your team can come into place. If you have an agent, a realtor that is on your team, they can help monitor this for you. Another example would be the short-term rental market. There are constantly new regulations that are being implemented in various states and cities. So if you are invested in the short-term rental market, then you need to be on top of that and aware of that for what's coming down the pipeline. Number 4 is to network with other investors. Collaboration is key, I think, in any business. So anytime that you can collaborate and work with other investors, share ideas, share tips, I think it's going to be a benefit to the industry as a whole. And lastly, I think it's important to continually educate yourself. Again, no matter what business or thing that you were invested in, you constantly want to be educating yourself so that you can stay on top of any market trends or adjustments in your investments. By the way, I've been helping families start their investment journey for the last 8+ years in the Palm Harbor area. If you have any questions, don't hesitate to reach out. You can find my contact information below. So I've provided you with a great overview of everything you need to know about real estate investing. And this is why I filmed an entire series that goes deeper into each of these topics. So click the video on the screen and let's start your journey today.